Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at brevant.com/wins.
And welcome to Markets Now. I'm Michelle Rook, joined this morning by Darin Newsom, Senior Market Analyst with Barchart. All right, we're seeing kind of some mixed trade in both the grain and livestock futures this morning. Darin, corn and wheat as we speak are higher. Is that short covering, or do you think we're starting to see some end user buying?
I think it's a little bit of both, Michelle. I think in the corn market, most likely this is some end user buying. We saw the national corn index, national average cash price, dip below $4 earlier this week, and it seemed to be enough, to start generating some buying interest. And the reason is the fundamental picture hasn't changed. If we look at that May, July future spread, we can continue to see. I mean, it's only covering like 26, 27% calculated full commercial carry. So we can see the commercial side still concerned about finding supplies to meet demand, as we head into planting season next spring. So, to me on these dips, it looks like there's going to be some coverage of possible needs further out. And so I think we continue to see that. On the wheat side, we've seen a lot of selling this week. We've seen, most likely funds continuing to add to their net short futures position. And so, when they get an opportunity, some of that will be lifted and, so on and so forth. It doesn't change the fact that fundamentally, U.S. wheat, all three markets are incredibly bearish. If we look at the national indexes, where they're sitting right now as we head towards the end of December, they're all priced below previous 5-year low end of December marks. And so, basic law of supply and demand tells us if the market price is that low, there's just way too much supply to meet demand.
Yeah, for sure. And so corn and wheat might be holding each other up here this morning. I know the March corn contract kind of bounced off the 100-day moving average in terms of support as well. But corn effectively is still in its trading range, Darin. And why is it, even when you have really strong exports, ethanol demand has been, or production has been at record levels, why can't we get above these overhead resistance areas when we get to the top end of that trading range?
Number one, corn likes to move sideways. Historically, that's just been what it does. Number two, we've got a lot of supply. And we can see that in the fact that basis continues to run, at or below its previous 5-year and 10-year low weekly closes. So there is good demand. But the fact that, and as with wheat, the national corn index is also running below its previous 5-year lows. So we know there's ample supplies to meet demand. It's just we have strong demand, just far more supplies at this point. The concern is, when the bins are locked up tight as we head into next spring's planting, where are some of these end users if demand stays strong, if export demand stays strong? If somehow ethanol demand continues to run high, then, okay, where are the supplies going to come from at that point? And I think this is the concern that we're seeing in the market. But for now, we do get these run-ups, and it just, there's not enough momentum, not enough strength, not a tight enough supply situation to put us through those highs.
Yeah, and wheat's kind of in the same situation where we've got really better demand than we've had for a while on the export front. But you can't get that market to move either, and we're down at contract lows. What? Just because we have too much wheat in the world?
Too much wheat in the world, and far too much wheat in the United States. And you're right. I mean, we have seen an uptick in demand, but it's like saying, okay, I have one apple instead of no apples when I'm trying to make a pie that requires 6 apples. So it's not like it's not like all of a sudden, we're just running hot on the demand side. It's really non-existent at this point. The wheat still, the U.S. is still, more of a secondary player, much as it is in soybeans, but as it has been for quite some time in the global wheat market as well. The biggest buyers in the world look elsewhere. And right now we know Russia continues to take Ukraine's wheat. And so, the world has plenty of wheat on hand. And again, we can see this not only in the futures market, but on the U.S. side in the cash indexes.
Yeah, and China canceling a couple of cargoes of wheat didn't help the cause either, did it?
No, and it certainly didn't. I don't think it was hugely. I don't think it was a big surprise. But it is interesting to go back to when all this was occurring. We saw the soft red winter market post post dramatically sharply higher open interest, which made trade volume, while open interest climbed as well that day. And I believe it was Tuesday. Something that we weren't really expecting this time of year when it's normally pretty quiet. To see that kind of spike, and then the next day or so we did see the cancellation. So it all kind of fit together.
Soybeans going in the opposite direction of corn and wheat this morning, and we've continued to see new lows for the move in that market. Even though we've had export demand coming at the market, another 4.2 million bushels of soybeans to unknown destinations this morning. Why is that not moving the market at all up?
Well, the biggest thing is we are making some sales, and they're not big, but we're starting to build some sales, which is just seasonal. This is the time of year when the U.S. makes sales. But what's interesting is there's still no shipments. According to the latest weekly export sales and shipments number, I believe through December, I don't remember, early December, as USDA continues to try to catch up, there are no shipments to China. So they're building a small book, kind of keeping an eye on the progress of Brazil's 2026 crop. So what this means is that these bushels, or these supplies that China is slowly adding, are vulnerable to cancellations as we go. The longer we go without any shipments, the more likely that we're going to see some cancellations, similar to what we just talked about with the white wheat. So that's a real risk. So again, also what we're seeing play out in the market is, as the CFTC catches up with its commitments to traders report a couple of weeks ago, we saw where at the same time the U.S. Government was reopening, the funds held a record large long futures position. And I mean, this is a warning flag waving, as strong as it possibly can, that there's going to be some liquidation coming. And that's exactly what's happened. We've dropped almost $1 from the moment that the lights were turned back on at the U.S. government. And so I found it, I don't think it's a coincidence that the market rallied while the government was shut down, and it has sold off once the government reopened again.
Yeah, and there's speculation that maybe China bought futures on the way up, and now they're selling on the way down. And now, like you said, we're on a fire sale, $1 lower or better than we were before. So does that indicate to you, you just said you think we could get cancellations from China, so they could cancel some of those early higher priced bushels and buy some of these lower priced ones right now?
They certainly could. We've seen that play out before. But we also have to remember, this much ballyhooed deal didn't actually say that China had to buy physical U.S. supplies, that they could cover positions in the futures market and then buy from the most competitive market. Well, we know, at least up until recently, that the FOB price at Brazilian ports was lower than what we've seen at the port of New Orleans for U.S. supplies. So, this great deal that was made didn't necessarily help anybody except for China, which, now that they're buying from, say, some other suppliers, maybe not Brazil, but possibly Argentina and others, they're lifting those hedges, and that's continuing to put pressure on the market as well. And we can see that not only we can see it in the Jan-March spread, but also as we look forward to Brazil's next crop in the March-May spread.
Now, the funds specifically, Darin, do you think they are about done liquidating? I mean, we did hold some key moving averages yesterday and bounced off like the 200-day, but is that enough of a signal for the funds to quit puking here or not?
I don't think so. We're going to want to see a clearer signal. Because yes, algorithms do look at moving averages, and so the 100 and 200-day, whatever it might be, could certainly come into play. But we've got no indication that it's happening yet. So yes, I think at some point in here we've seen the market again, erase roughly 75-80% of what it gained if we just look at daily closes only in the March futures contract. So we've got that. We've got the moving averages coming into play. So at some point in here, we could see algorithms start to possibly cover shorts, but I doubt that they're going to get too excited, given the fundamental picture, to start rebuilding their long.
One other market I wanted to ask you about: crude oil below the $60 mark. We haven't been there for several years. Do we keep going down because of the big global glut that we have of oil at this point? And does it have an impact on money flow or the ag space at all at this point?
A bunch of great questions in there, Michelle. Let's start with, yes, we've seen the spot month West Texas Intermediate market drop to its lowest price since February 2021. This despite social media posts and actions by the U.S. president and the U.S. administration trying to trigger some sort of price increase with its actions around Venezuela. So far, we get a little blip as algorithms, as you mentioned earlier, as algorithms react. But then the reality that supply and demand just simply outweighs what's going on in the news. And what I find interesting with this is that it seems to contradict what we see in the market itself, as the market's forward curve has been inverted or backwardated in New York terms, which would signal that we've actually got bullish supply and demand situation. That just simply isn't the case, because regardless of who you hear speaking about the market, the theme is the same. Globally, there is a glut of crude oil supplies, be it Brent, West Texas Intermediate, whatever. And the projection for demand 2026 and beyond is for demand to continue to decrease. And so, it certainly doesn't seem to fit with what we see in the market. But for now, if we just base it on market price, much as we do on wheat, law of supply and demand, yes, I think that's going to continue to weigh on the crude oil market. I think it's going to continue to keep investment money away from some commodity sectors and into others. I mean, they're going to be looking for markets that actually have bullish supply and demand. And in the grains, I don't really see anything standing out to me at this point, with the possible exception being corn.
So is the fact that you have the energy prices down at these levels the main reason why we continue to see the inflation data maybe cooler than expected? CPI out this morning, only 2.7%.
I think so, because if we look at the consumer staples, the one that isn't high at this point is energies. And then, to me, the CPI numbers are no different than any other government number. I think you have to take them with a grain of salt. And I always find it interesting that those who tout these numbers, who look how important these is, look how bullish, or look how good these are. It depends on what side of the political aisle they sit on, because you could take the same set of numbers and the other group says, oh, these are terrible. These are indicating the economy's falling apart. And then, you flip who's in control in Washington, and all of a sudden, the opinion switches as well. So I think that says what's most important about these numbers, and that they really aren't that important. If we do the eyeball test by what we see when we go to, say, the grocery store or anywhere else where we have to buy certain goods, and we can see inflation's still an issue. Inflation is a problem. Much of this comes from our one-word trade policy, which is basically a self-imposed tax on the United States consumer. So, that's the real issue, and how long we can put up with this, whether it be 2.7%, 3.1%, whatever it is. We just know that basically prices are high and they aren't coming down anytime soon.
All right. Thanks so much for your insight. Darin Newsom, Senior Market Analyst with Barchart. That is Markets Now.
When you choose Brevant Seeds, you don't just win. You win so big, the very ground beneath your feet cries tears of joy. You win so big that second place feels like a participation trophy. You win so big, you might as well be harvesting buried treasure. Oh, sorry, just one more. When you choose Brevant Seeds, you don't just win. You hit the damn jackpot. Don't just win. Talk with your retailer or visit Brevant.com/jackpot to get started.